Hello and welcome to the BK Crypto Weekly Roundup, the show that makes sense of the digital asset space. I'm Ansel.
I'm Kimberly. We're here to cut through the noise and give you the straightforward happenings in crypto. And Ansel, wow, the main story this week seems to be just pure momentum. The numbers are staggering.
They really are. The entire crypto market shot past a $4.1 trillion valuation.
Wow.
I mean, to give everyone a sense of scale, that's like taking the value of a company like Apple and then tripling it.
Okay, that's huge.
It's a flood of confidence, and it's lifting the two biggest boats first.
Right, Bitcoin and Ethereum. So what's the story there?
Well, Bitcoin is the talk of the town. It's broken above $122,000.
Okay.
It's so close to its all-time high, you can almost feel the tension in the market.
Right.
And at the same time, Ethereum soared past $4,300. That's a milestone it hasn't seen since, late 2021? This isn't just a small jump. It's a significant breakout.
It feels different this time,
Yeah, it does.
Less like that pure speculation and more like a broader acceptance is setting in. And on that note, I've been really fascinated by where the so-called smart money is going. We're hearing all these reports about crypto whales.
Right. And for anyone just joining us, whales is simply the term for accounts with a massive amount of crypto.
Got it.
And watching what they do can be very, very telling. They're not just buying Bitcoin. They're accumulating the smaller coins, what we call altcoins.
Exactly. I saw that. Coins like Pepe and Mantle have seen these huge buys from whales.
Really?
It's a huge sign of confidence spreading across the board. They're betting that this rising tide will lift all ships, not just the big ones. But Ansel, I think the most groundbreaking event this week, it didn't even happen on the market.
You must be talking about the Genius Act. This is arguably the headline of the year.
Absolutely.
For the first time, the U.S. has passed a major law that sets clear rules for a part of the crypto world, specifically for stablecoins.
Okay, let's pause right there, because stablecoin is a word we hear all the time. How would you explain it to someone at a coffee shop?
The simplest analogy is a casino chip. So you give the cashier $1 and you get a chip that's worth $1.
Okay.
You can use that chip at any table and you always know you can trade it back for your original dollar.
Right.
A stablecoin it's just a digital version of that chip backed one for one by a real dollar in a reserve.
That is a great way to put it. So this new law basically just makes sure that when a company issues these digital dollars, the real dollars are actually there. It's all about accountability.
Exactly. It's a total game changer.
Right.
It removes this huge piece of the risk and the uncertainty that kept the big conservative companies on the sidelines.
Yeah.
And we're already seeing the effect. A publicly traded company, BNC, just announced they bought $160 million worth of BNB. That's the native token of the Binance ecosystem.
So this isn't theoretical anymore.
Not at all.
The regulation provides the safety net, and now the big institutions are starting to jump in. It feels like we're watching the foundation for the next phase of digital finance get built, brick by brick.
That's the perfect summary. It's a week where the market showed its strength, but the regulations, they gave it a real direction for the future. It's exciting and honestly a little bit historic.
And that brings us to the end of our roundup. We've talked about record prices, landmark regulations. It all points toward crypto becoming a much more integrated part of our financial lives.
So here's a question we'd like you to think about. As these regulated digital dollars, these stable coins become more common, would you be more willing to use them for everyday stuff, like buying groceries or paying a friend back instead of using cash or a credit card?
Something to ponder. Until next time, I'm Kimberly.
And I'm Ansel. Thanks for tuning in to BK Crypto.